Everyone's talking about gold, inflation, and the collapse of fiat, but almost no one is watching what's happening in the silver market. And that's exactly why this could be the biggest financial blind spot of our generation. Banks are dumping silver contracts at a record pace, walking away from the paper game like they know something's coming. Meanwhile, BRICS nations, led by China, Russia, and now even Saudi Arabia, are hoarding physical metal, building out vaults, and constructing a parallel financial system backed by real assets. And it's not just abroad. Here in the U.S., states like Texas and Florida are suddenly legalizing silver as money, buying physical bullion with taxpayer funds. Ask yourself, why are governments and institutions quietly grabbing physical silver while pushing paper prices lower? Why are the same people who told you silver was irrelevant now scrambling to lock it down? Because when the tipping point comes, and it will, there will be no time to reposition. This isn't just about price movement. This is about a once-in-a-century imbalance between supply, demand, and reality. If silver breaks out of its manipulated range, we're not just talking about $50 silver. We're talking $500, and a financial system scrambling to catch up. So what's really going on behind the scenes? And what do they know that we don't? Across America, a quiet revolution is unfolding. In states like Utah, Texas, Florida, and several others, lawmakers are reintroducing something the financial system hoped you'd forget: real money. Gold and silver are being reclassified as legal tender, free from sales tax, and in some cases, backed by government reserves. Texas has gone so far as to establish its own state-run bullion depository, holding precious metals on behalf of citizens and institutions. Utah was one of the first to kick off this movement, and now the momentum is spreading fast. This isn't some symbolic gesture. It's a deliberate effort to insulate local economies from dollar instability and central bank mismanagement. And while gold is the headline, silver is the sleeper. Every step toward legitimizing gold as currency indirectly legitimizes silver, too. It reminds the public and the markets that silver is not just a commodity. It's constitutional money. And when laws remove taxes and friction from silver transactions, retail demand surges. Investors who once saw silver as speculative now see it as practical, spendable, and most importantly, safe. This legal shift is laying the groundwork for a massive psychological pivot. Because once people start transacting with silver, they stop thinking of it as a trade and start thinking of it as wealth. And that changes everything. Behind closed doors, the Federal Reserve is quietly panicking. While the public narrative insists everything is under control, the Fed has secretly bought over $70 billion in treasuries in just a matter of days. Why? Because the world is losing faith in U.S. debt. Foreign buyers are pulling back, demand is drying up, and the Fed is being forced to step in as the buyer of last resort. At the same time, the U.S. dollar has shed nearly 9% of its value since January. Think about that. In less than half a year, nearly a tenth of your purchasing power evaporated, and the year's not even over. But gold? Gold has surged nearly 20% in the same window, flashing a massive warning sign that monetary conditions are deteriorating fast. And here's where silver enters the picture. Historically, silver lags gold during the early phases of monetary chaos, but when it catches up, it does so with a vengeance. Unlike gold, silver has a smaller market, less liquidity, and higher volatility, which means when panic sets in, the moves are sharper and far more aggressive. The longer the Fed plays games with the money supply, the closer we get to that tipping point where investors rush into hard assets and silver gets repriced overnight. What we're seeing now isn't just inflation. It's a breakdown in trust. And once that trust is gone, silver becomes not just an investment, but a necessity. The global financial order is shifting, and BRICS is leading the charge. What started as a loose economic alliance has morphed into a direct challenge to the Western financial system. China and Saudi Arabia are setting up gold vaults to settle international trade in yuan and bullion, bypassing the US dollar entirely. And they're not alone. Over 70% of the global population is now aligned with BRICS nations or their allies, forming a bloc that's actively building a parallel economy backed by real assets, not paper promises. This isn't just a political shift, it's a monetary earthquake. The more trade that flows through gold-backed channels, the weaker the dollar becomes. And while gold is the headline metal in this transformation, silver is the silent benefactor. As the poor man's gold, silver always plays catch-up, but when it does, it explodes. Historically, monetary resets have pushed silver to multiples of its previous highs, especially when confidence in fiat currencies collapses. And that's exactly what BRICS is engineering. A slow, deliberate erosion of the dollar's dominance. When the dollar is no longer the world's default currency, the world will turn to assets that don't carry counterparty risk, and silver, just like gold, will be back in the spotlight. This is more than de-dollarization. It's the remonetization of metals, and silver is next in line. While institutions dump paper, retail buyers are quietly clearing the shelves. At local coin shops across the country, silver demand hasn't just stayed strong, it's intensifying. Junk silver, once seen as outdated and bulky, is now commanding premiums as high as $1.99 over spot. Bullion bars, especially foreign-made ones, are becoming harder to source thanks to rising tariffs and international trade friction. But the most telling sign? Everyday people are beginning to treat silver not as an investment, but as money. Farmers, barbers, even small-town contractors are increasingly willing to accept silver in trade. This isn't a trend driven by speculation. It's driven by survival. People are sensing that something's wrong with the system, and they're turning to what's real. But here's the catch. While physical demand soars, the paper markets are still artificially suppressing the spot price. Big banks offload contracts, driving prices lower on screen, even as the shelves are being emptied in real life. This disconnect is growing by the day, and at some point, it has to resolve. Because when physical scarcity collides with suppressed prices, the outcome isn't gradual, it's violent. The retail crowd may be mocked as unsophisticated, but in the end, they're the ones holding the metal. And when the system breaks, they won't be the ones scrambling. Right now, the public is asleep, but the insiders are wide awake. While mainstream media barely mentions precious metals, central banks are buying gold at a record pace, and the world's elite are quietly moving into hard assets. Silver, meanwhile, remains the most overlooked asset in the market. Ask the average person about silver, and you'll get blank stares or shrugged shoulders. They've been conditioned to believe it's irrelevant, volatile, or just too old-fashioned. But here's the irony. That widespread ignorance is the very reason silver's setup is so explosive. When everyone is positioned the wrong way, even a small shift in perception can ignite a parabolic move. And silver isn't just cheap, it's critical. It powers solar panels, electric vehicles, 5G infrastructure, and more. Unlike gold, which is largely held as wealth, silver is constantly consumed. That means available supply keeps shrinking, even as demand continues to climb. The longer the public stays blind, the more extreme the correction will be when the truth finally hits. One day, headlines will scream about a silver shortage. Analysts will pretend they didn't see it coming. But those paying attention now won't be caught off guard. They'll be ahead of the curve, positioned before the herd catches on.